what I learned from GME and I applied to CCIV. Stay tuned. You really don't want to miss this one. Hi guys, today I'm going to be talking about CCIV and what I did with that stock while the market was down. As you guys are well aware, the market for the last week or so, the NASDAQ has totally been down, but a lot of the plays that really took a big hit in this market with the last dip were a lot of the SPAC plays and the EV plays. A lot of them took from Tesla all the way down to NIO, including CCIV, Lucid Motors. But what I want to talk about today is the opportunity that dip presented. And I want to tell you guys that it's very important that you guys take full advantage sometimes of these opportunities because they don't come that often. But when they do, you have to take advantage. And depending on when you see this video, this is still a very good time to jump in on this play, in my opinion, okay? Remember guys, I'm not a financial advisor, but the opinions that I express on this channel are just my opinions and what I'm doing with the stock. So if you guys are not following us on Twitter, it's very important that you guys do, okay? You can follow us at Investing OG at Twitter, okay? At Investing OG. Follow us there for the latest information. So during the dip, I kept putting up updates of what I was buying and stuff like that. And one of the things that I've been buying since around the $25 mark is CCIV. And what I've been doing is not only have I been buying the shares of stock, but I've also been buying long calls, okay? Leap year calls, that's what they call them. And what that means, if you look at our screen here, what that means is that when there's a big dip, a major dip, okay? There's an opportunity for you to buy calls at a discounted price. Okay, so I started buying the CCIV calls, the 85 strike, and I went ahead and put it on my tweet. Bought more calls, CCIV, $85 strike, 121.22. Okay, that's when they expire. I went ahead and bought calls, and I started buying at when CCIV was about 25 bucks, and then it started dropping to 23, 22, 21. And I've been buying all along the way. And if it continues to drop or if it goes back down, I'm going to go ahead and buy some more. This is what I'm trying to do, guys. And I did this once before with GME. I made a video that the time to buy calls or stock is when the price is going down. That's when you get your best deals, guys. I remember a couple of weeks ago, CCIV was at an all-time high. It almost nearly reached $65, okay? Everybody was buying calls. A lot of people got killed on those calls because they ended up, the price of CCIV ended up tanking right before the merger or right after the merger. When these situations happen where the price drops immensely, people tend not to want to touch these stocks for some reason. But that only gives you an opportunity to buy at a discounted rate. And I'm going to explain to you, and I want you to stay tuned because I'm going to show you and give you an idea of how you can take advantage on the next dip of your favorite stock, okay? So I went ahead and did this. I went ahead and got the CCIV calls, $85 call, and it's the strike price is $85, and it expires on 1/21/2020, okay? Now, I'm going to break this down for you, and I'm going to show you on optionsprofitcalculator.com. I will put that on the description below so you can do your calculations on any of your calls that you're planning to get into, okay? So all we do, and I'm going to give you an idea of how much we stand to make, okay? In the symbol here, you're going to put in your symbol. So whatever stock it is for you, in this case it's CCIV. I'm going to go ahead and put CCIV. Then I'm going to get the price. Current price right now trading at $24.45. Now remember, I started buying these calls from 25 all the way down to 21, okay? So it's different, a little bit different on the pricing, but here you go. Buy and then select option. So I ended up buying the January 21st, this option here, and I select the price, the $85 strike, okay? Now this number may vary for you depending on when you buy it or if you end up buying it or you bought it already. But this is just, we're just going with the actual price. Actually, if you see this video and the price is this price, you can stand to make this money as well. So I'll do the 21st, January 21st call, right? The price per option was $268, and I did buy 25 of these calls. I'm gonna go ahead and put in 25. This number basically contains, it relates to the number of contracts that you bought for whatever stock it was. And then all you gotta do is just press calculate. Once you do press calculate, it'll give you a graph like this, where this side right here is your price. So say for example, CCIV is currently trading around 25 bucks, and see it shot up all the way to 70 bucks, okay? $70, which is right here, this side, left side, $70. Now remember, CCIV on pure hype went all the way up to 65 bucks, right about $65. Now, what can it go up to once they start producing cars, selling cars, and get out on the market? I think it can go a lot higher, in my opinion, okay? But I'm gonna keep it conservative. I'm gonna say 70 bucks. It's only gonna go to $70. And let's take out this call and we say, okay, well, it hit $70 in September. Okay? Hit $70 in September, second week of September, September 12th. Okay, you can see it here. September, if you go down, you hit the 70 here and you go right to the middle, then you get 420. And let me open up this here. This is basically, it's giving you how much you stand to make. So this is your options calculator. You input the information. Once you get it, then it'll tell you. So you did an investment of $6,700. It's for the option ending on January 21st, and you picked up 25 shares. Remember, 25 contracts, 100 shares each. And the total was $35,400 on your return. If it hits $70, your total profit would be $28,700. Basically, you're just subtracting what you paid for the contracts. Guys, $28,700 on a $6,700 investment. That's stupid money to me. And it's an opportunity that we already did once. We did this with Rocket. We did this with GME, and in both times it worked out. We bought GME calls once the price had settled out, after it hit 300, after when it started coming down, when nobody wanted it, guys, we went ahead and bought the calls for cheap. I think it was like the price of it was like at 60 bucks. I ended up paying like 350 bucks per contract. And I saved them. And guess what, guys? GME went up. Guys, it doesn't take a genius to put all this together and say, hey, maybe CCIV will go back up. Maybe. I think it will. So you have an opportunity. This opportunity does not last forever, guys. You guys could still do this tomorrow, depending on when you see this video. That's why it's very important you have that notification bell, checked off on your notification, so that way you can get these videos all the time, every time we release them. Okay, this information I'm giving you guys right here is just my own personal information. It's information that's taken me a long time to get. Okay, but I try to put all this together for you guys and give you guys this information. With that, guys, just wanted to give you an example of what can be done in a bad situation when you say, you know what, nobody wants to touch these stocks when they're down. Well, when nobody wants to touch them, make sure you're touching them. Make sure you're buying them, because that way you have this type of opportunity. And I'm going to make a secondary video, whether it goes good or bad, whether I lose money or make money. I'm going to make a secondary video, and we'll reach back at a future date and time. Remember, with calls, I don't have to wait till the end of the year. I could sell them next month. If it goes up to 60 bucks, I could sell this call next month, and I can make my money that fast. With that, guys, thank you guys for watching. Make sure you follow us on Twitter at InvestingOG. With that, guys, thank you guys for watching, and I'll see you on the next one.